Good afternoon, ladies and gentlemen. It's the Market Sniper here with you. Yes, USA dollar. It is. We're looking at the dollar. We're going to have a look at some of the things we've said on the dollar, some right, some not right. Here we go. Let's jump straight in. This is dollar v euro. Dollar usually is, if you're talking the dollar, the euro, these are the two big ways. The bigger time frame, there was a suggestion, a ghost of a macro head and shoulders that we highlighted over here. We traded the long side there. We had the squeeze there that suggested downside. That was a very steady and consistent sell-off in the Euro USD. You know, the last high there was at 124 and you woke up and next thing you were down at 115. It was quite abrupt. Then we rallied and we squeezed here. We suggested at the time that it would break to the downside and make a inverted HVF target. It was a bit of a wide funnel. You could have got in early there. On the downside, you could have had your protection there. That should be the other way around, by the way, red and green. So in there, stop there. And you could have traded that. A little bit of a tip-tap-toe at your funnel area. And then it made a target. So we closed some of our positions there for profit. That's where the good bit ends, and the not so good bit for the short side trade changes. Surprisingly robust rebound. A lot of the dollar started to become the story with the trade wars and all of that. So new information came into the market that clearly has not been deemed good for the dollar, or uncertainty on its own is just bad for a currency. So maybe it will be good for the dollar in the long run, but as long as it's unclear, people play defense and they say we'll hide in the euro until this trade war monarchy happens out. Assuming that it is the trade war, the honest truth is we don't really know. All we do know is that more people are getting out of the dollar for something else than are getting in from something else. So that is why you got this really strong rebound strength. Then we dipped back down, paused, and then we wound up a little bit. You'll see there is actually some structure in that. And then you had a very clear impulsing candle that invalidates that inverted HVF. That doesn't mean you can't still be a head and shoulder, but not for me as a quality one, with that upside there. This is a dip that I would certainly say is a clear break. What I would call head and shoulder line would probably be that lighter blue line here that I'm illustrating. So there was clear breaks. You just dipped through them and rallied before, just dipped through them. So that was a clear break away. So you've probably gone now. You're close to invalidating the right shoulder there. And for us, you already will have invalidated the bearishness of the inverted HVF that made its target. So that inverted HVF performed, did its business, and that was it. Shut of shop, rally, and now new level high taken there. So the notion of the residual that was going to make head and shoulders targets a lot more aggressive, far further down, has been closed at that point with just the size loss. And if you got in early at the stop point there, again, just a small size loss. And what you made on the gain to the downside was more than covered that. But it tells us something about the dollar more than probably the euro. The euro's issues put on ice for now, not so much chitter and chatter about the Italian banks, all about China, trade war, etc., etc. Seems to be the predominant narrative. We can look at this in another way. It's the dollar index. Large amount of euro in that versus the dollar. You also have the Swiss franc, which is a very strong segment of the euro and has done very well against the dollar. I should maybe even take a run past the USDCHF. Maybe we'll have time for that. But again, head and shoulders, bit of a scrappy one. Left shoulder, head, big right shoulder, another bounce, playing with a line, break. Quite messy start. Then when it went. It made target. Little fractal there, pressing lower. Up. Another little mini fractal, not quite as small, pressing lower. All the targets being made on those downside, and now you get the squeeze. That's the inverse of the reversal squeeze over here, which has got the red line and the gray. So there's a large amount of obvious correlation. It's almost like sitting looking at the chart upside down. Is a slight difference. Rally, 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 key level there. You've got an upside HVF there. Boom, made target down, squeeze, 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 break. So you have just triggered both the funnel on the access point on the funnel. So that gives a target to there. That's how HVF method draws the head and shoulders. So it's slightly more conservative. And then a trim the lows, which captures the nearest round number, 94.5 on that shoulder here. And then of course you have the HVF that you take for the other one. So that's slightly bigger target down there. Does confluence with that little fractals area as well. So that whole 92s does look an interesting level. Will we go down there for the dollar? That makes it a bit of a dull period, potentially coming up for the dollar after largely getting it accurate from this period on. That was going to strong. It's not cracked on. And it does look like it's in a state of reversal. And as I mentioned, the Eurozone collectively, which also has the pound, the Swiss franc in it, there are differences between those and the euro, obviously itself, but seem to be on the stronger side at the moment, FX wise. So more possible downside for the dollar. What does that mean? Well, we had a little setup we were watching on the try over here. That means that could even be a downside break, could be upside. We could get a rally and break, but now we're just looking, could it be a downside? Was it oversold? Really big melt up, big slap in the face there. Could it be inversion or will it be to the upside? That's one draw that you can watch. What else have I got for you? Let's get that USD Swiss franc. The Swiss franc is a currency I respect, broadly speaking. Largely, apart from its terrible banks, dumbest guys in the room after the German banks, I think maybe even dumber in some ways, UBS and the like, in the subprime debacle, wading in for yield at just the wrong moment. But anyway, a little bit of a squeeze up top there. And went real low vol and then smacked it down, has been trading down all the way. So remember, this was a parity. This is key currency, You can see how key levels of significance just run. Is there any more significant level, I ask you, than parity for Swiss franc and dollar? I'd argue you can't do a more significant one. Let's just see how, just for interest sakes, how it's been over time immemorial that we have data for here. So the Swiss franc has slowly become the stronger of the two. It's just fascinating. I want to get it as far back as possible so that you can see these key levels. Note that fail, just run pullback, just run pullback, just run pullback. This also has a degree of complex head and shoulder to it. As well. There was a clear floor on the way down. There was another round number. There was a floor, 1.2. I remember them trying to hold the 1.2 against the euro, which was the great peg fall. And you can see to a degree against the dollar, there was a little bit of a flat bottom there and another inverted HVS structure that went into overperformance mode. So yeah, interesting time. That was when dollar was super strong. I mean, you actually almost got 2 Swiss franc way back in 2000. I'm not sure you're going back there in real life. But anyway, let's have a look at this back to the weekly time frame. Is there something here? It's very convex broadly. This was extremely volatile. That was the peg fail period. So you might want to remember that's what central banks do when they suddenly walk away from pegs. But that was the top out. So I'd say you got a double head here, very, very similar double top. So you're going to get another form of reversal pattern in the double top. In fact, the logical thing is the 103. Take the logical round number. So how far did it dip? In the lows here, your next logical thing is to do your 95 draw, 95 and 103. So you've got a clear double top there. Is that a left shoulder complex double top head with this being a right shoulder? Well, it doesn't really matter if it's going to give you the same target. So you might have the double top and neckline. This would point to further real weakness in the dollar and strength in the franc. I'm not sure they'd welcome that, the Swiss franc. They don't like it when their stuff gets too expensive to sell in offshore markets, because everybody wants a real currency with not too much debt. But it does have a smidgen of left shoulder, head, and right shoulder. Is a big call, though. It's a big call to go lower. At its strongest point high, you were there, but that was very short while, and we know the circumstances around it. When else did this occur? There was that capitulation low in the euro. Look again. Wow. I mean, I'm just fascinated. Key level of significance. Just run. So yeah, could we be down there again? It's possible. So still a fave if you have to sit up in a currency. It's still a fave for me. You might want to watch the Singapore dollar as well, quite stable currency as well. Why don't we take a look at the Sing? Let's save that, baby, and do one more. So we're doing the dollar round trip against other currencies. Where might you hide your hard-earned if you seek it not to be devalued in a currency war, a trade war, and all that goes with it? Let's have a look. We'll go for forex.com. Thank you very much. Yep. How's she done as well over the years? So as you can see, not much data here. That's a bit disappointing. Let's try get more data version. So we'll let that one go, and we'll go for Oanda. Not too much more. Come on, guys. You can do more than 5 years of data. Be real. That's better. That's a little bit better. Leave it up to the ice. It's still only to 93, but you can see broadly from this big swings, but lower lows and lower highs. Look at that rounding convexity. Wow. And did you have the mother of all? You've got a number of draws you could have taken for head and shoulders there. You could have taken a neckline there. You could have taken a neckline there. And I suspect each one of those would have come rumbling in home. Very, very rounded top. Final spike off, capitulation melt ups, then convexity. Look at that doming there on those 2 points there and there. So, I mean, that's just fun to see on the really big time frames. And when you get in big time frame setups like this, these are truly set and forget trades. If you have dollars, you just park them up in Singapore dollars, and you just forget about them. And in the end of the day, you end up a whole bunch better off, because at that point, 1.85, again, this one's not too far above parity, 1.2. So that's quite a gain to get. You're talking about a 50%. When you go from 1.2 to 1.8, yeah, 0.6 on a 1.2 currency, it's a 50% gain. Both of these making targets to the downside quite comfortably. So those are, once again, currencies that you can look at holding if you have multi-currency accounts. And I would certainly say it's something worth considering if you're sitting in a sustained period of weak dollar. So they're going to try to keep the stock market up. That's a bit pricey with a weak currency. So if you devalue the currency, then the net global devaluation of the Apple, the Amazons of the world is reducing without the share price having to drop. It's one way of releasing some steam out of a bubble. It's also one way of releasing, devaluing your debt is devaluing your currency. And so Trump, Kissinger doctrine fully at work here. We'll see how it goes. But Singapore dollar looking a bit peaky here, so another point through which it could sell off and maybe make new lows. So also a strong currency which broadly doesn't keep debt and has a semi-serious central bank. So put that in your pipe and smoke it along with a Swiss franc, and that's your take on the dollar. Francis, we'll be doing a webinar not this Wednesday, October the 3rd, new material, if you haven't attended before, for the serious trader, but come and watch, anyhow. And if you like it, there will be an offer at the end. But you'll get some ideas of how we're thinking, what our take is on the market, what are the key benefits you have what are the key strengths and weaknesses, and how actually you haven't really learned to become a good trader until you can make money in a market that is selling off. So being able to short as a trading skill, the value of that. So find out a bit more and register at themarketsniper.com. Speak to you then. Dollar looking weak. Alternatives are available. Yes, indeed. And that hasn't even touched on the crypto realm. Okay. Bye for now, guys.